everyone, it's Tom Gentile. Welcome to Tom's Trading Room, and we are in the month of February, and I want to show you a really cool thing you can do with Tom's Trading Tools if you haven't done so already. It's how to overlay implied volatilities right on top of a risk graph, and then simply go from symbol to symbol once you put this in place. So what you're seeing right now is the SPY, all right, the Spider S&P 500, and I've got the stock chart on here, and you can see the stock chart. It's in a candle formation, and I've got all the at-the-money implied volatilities laid on top of this. Now, how you do this is actually very simple. You're going to go to stocks, and you're going to go to charts, and you're going to go down to stock chart. And when you do that, it's going to open up this stock chart button you see here, this window. And over on the right-hand side, you'll see the controls. Now, as you can see, I've got in SPY as a symbol. All right. I could also do it by list, but let's just do it by stock symbol. And then what I'm going to do for chart type, I'm actually going to put all IVs, all implied volatilities. If you want to look at a single IV, you could do that as well. You can also look at statistical volatility. You can look at volume, put-call ratios, probability cones, darknet, all kinds of neat stuff you can do here in these charts. But I'm going to set it to all IVs, so I'm looking at short, medium, and long-term implied volatility. The next thing you want to do is where it says Stock Chart Overlay 1, make sure that says Stock. That way you're able to see the implied volatilities of the S&P or the SPY and the stock chart overlay of the S&P or SPY. All right? There's a lot of other things you can do here too with technical indicators, but these are going to be charts that are going to be below the current chart. As you can see, all my technical indicators are in their own separate charts. So one at the top I'm interested in here. So I've hit SPY, and I actually got the last 100 days of the S&P. And actually what I'm doing is I'm actually preparing for a webinar tonight. And so you can see here that the implied volatilities on the S&P have slowly been going higher. All right, now let's move to bonds and let's take a look at it, because I look at the four major assets. All right, stocks, bonds, and bonds. I look at TLT. Just type TLT in and hit enter, and you'll see the same thing. The bond market's been rising. This means interest rates have been falling. All right, this is a chart from September to current. Look what else has been rising, though. Implied volatilities have also been rising in the bond market. How about the euro? All right, we look at FXE for the euro. So look at FXE. Everything stays the same. Now look at the FXE. The euro's been dropping. Volatility, especially in the last month to 2 months, has been on the rise. All right, because as the euro's been falling, and you can see here, most recently the euro's starting to rise here since February, and we've seen a little bit of a drop-off, but still implied volatility is very high for the euro-dollar. One more, we'll take a look at, actually look at two. Let's look at USO. All right, that's the ETF that we look at for crude oil. Look at this. I mean, ever since, and you can take this chart back even farther, you know, if we were to look at like 200 days of data instead of 100. Let's take a look at 200 and update this thing. You can see here, we had that peak in oil back in mid-July, and ever since then, oil has gone from a 15 at-the-money vols all the way up to now. I mean, the short terms are up at 65. All right, and you've got the 30 to 60 days that are trading just south of 60. But you can see as the price of oil has dropped, the implied volatilities on the options has risen because traders are nervous from one day to the next. Where is this thing going to be? Finally, let's set this back to 100. I want to look at something else that that is an interesting asset class, and that's gold. And GLD is the ETF we're going to look at for gold. So what's gold been doing in terms of volatility? Well, you see the low end in the last 100 trading days was trading around 14 for the ATMs, and the high on the short term has been 26. So our average is really like right around, let's call it 20. Where are we? We're just slightly below the average. You know, so if you look at that, you can see that gold's been falling off a little bit. It's kind of, you know, it's making what we like to call lower highs and lower lows. But look what else is falling with it. It is actually falling as volatility is falling. So just wanted to update you on what I think is a really neat thing that you could be doing with any symbol in the Tom's Trading Room universe. Check it out, guys. It's called not risk graph overlay. This is stock chart overlay, and you can overlay tons of different things out here. All right, thanks for joining me, and we'll see you soon again on another update in the room. Thanks, guys.